President Trump just introduced Kevin Hassett as a potential Fed chair at the White House, and prediction markets immediately priced his nomination probability above 85%. If confirmed, Hassett would become the most dovish and explicitly crypto-friendly Federal Reserve chair in history. This is not speculation. This is the single most important macro event for digital assets in 2026. Here's why the crypto market is already reacting. Kevin Hassett currently serves as director of the National Economic Council. He previously chaired the Council of Economic Advisors during Trump's first term, and he has publicly stated that, if he were Fed chair, he would cut rates immediately. That single quote alone tells you everything about the policy direction. Faster and deeper rate cuts than the current gradual path, lower funding costs, and significantly more liquidity flowing toward risk assets, including Bitcoin and the broader cryptocurrency market. But the dovish stance is only half the story. Hassett owns at least $1 million in Coinbase stock, possibly as much as $5 million, and has served on Coinbase's Global Advisory Council. He has led the administration's digital asset working groups and consistently argues for regulatory frameworks that leave room for innovation rather than suffocation. In short, he understands blockchain at a level almost no previous Fed chair ever has. Contrast that with the other leading contender, former Governor Kevin Warsh, who favors tighter policy, supports wholesale central bank digital currency, and would likely enforce the new Genius Act with maximum strictness. A Warsh Fed would mean higher for longer rates and heavier compliance burdens on private stablecoins. The gap between the two outcomes could not be wider. Speaking of the Genius Act, signed into law in July 2025, this legislation now forces all U.S. payment stablecoin issuers to hold 100% reserves in treasuries or cash equivalents, publish monthly attestations, comply fully with AML rules, and build technical capability to freeze or burn tokens on demand. It also permanently bans issuers from paying interest to holders. The next chair will decide how aggressively these rules are interpreted and enforced. A Hassett-led Fed is widely expected to adopt the most flexible, growth-oriented implementation possible. Markets are not waiting for the official nomination. Long-term Treasury yields dipped last week on the rumors alone, and Bitcoin's correlation with rate expectations has rarely been clearer. Every major Bitcoin bull market in history has coincided with a weakening US dollar index. Aggressive cuts under Hassett would almost certainly deliver exactly that. There are still risks. If a hawkish surprise emerges, or if systemic vulnerabilities like MicroStrategy's potential index exclusion are triggered in a tight liquidity environment, the downside could be sharp. But the base case has shifted dramatically. Lower rates, a softer dollar, and a regulator who actually understands the technology. The announcement is expected before Christmas. When it lands, the market reaction is likely to be immediate and violent to the upside for risk assets. If you found this analysis useful, please hit the like button and consider subscribing so you don't miss the follow-up the moment the nomination is official. Thank you for watching, and I'll see you in the next one.